Hey guys, welcome back to another video. So this video is just going to be about my portfolio, what I'm doing in it, what I plan for the future, and overall what's going on. So starting off, this account I deposited $425, so we're looking at about a $35 gain over the past about 47 days. So I've been trading for a little bit over a month on this account, and we have a total of an 8% gain about growth. So that's averaging about 0.2% growth every day, even though I've had my fair share of losers, red days. For example, this is probably my worst day, 301 to 275, and then to 268 in the span of 2 days. So right now, what I'm holding are a couple stocks, and I'll go over these real quick. I'm just going to explain. My overall strategy is to really diversify my portfolio, and I'm going to be holding a little bit of long-term stocks, some dividend stocks, preferably stocks that qualify as both those. And I'm also going to be holding some gold because we are currently in a recession. The Fed is printing money. We are probably heading towards inflation. And as you know, or most people know, gold does tend to go up with inflation. So that's why I'm holding some gold stocks such as DRD and BAR AAU and GLDM, which are some of the best gold stocks and ETFs. And as you can see, they have gained me money over the past, I think I've been holding these for a week or two. So I'm pretty happy with that. Keep in mind, these are small gains because you're looking at a very small portfolio, so don't be expecting $200 in a day. First stock is FUV. This is a riskier stock, and the reason I don't have a lot of risky stocks, and this is pretty much the only risky stock I have, is because I'm trying to keep my risk fairly low in this portfolio because I am working with a very small account, so any loss is a big loss compared to your $100,000 account or $10,000 account. If you lose $10 in a day, it's not much, but if I lose $10 in a day, it's quite a bit. So I do not want a lot of risky stocks. So FUV is a electric car manufacturer. The reason I got in is because they're showing really good growth. I did get in a little late, which is borderline chasing, which is definitely not recommended. You want to get in at confirmation when the charts close with one green candle above the SMA line. I'll show you that right now. Now, as you can see on here, this stock has been showing fabulous growth over the past couple months, and I got in somewhere around here, which, as I said, was chasing the price. Not very smart of me, but oh well. It is, as I said, kind of a risky trade. Usually I am looking to get in down here, but here's what I'm trying to explain. So when trading, it's good to have a plan and not just trade blindly because, as you can see in my account, most of the growth on it has been over the past couple weeks because before that, I was not trading smart. I was just going in. I was really not paying attention to this account. I mainly just bought some airlines, some cruise stocks, lots of dividend stocks, and just left it there, did not pay attention. So I was gaining money, but I was also losing it, so it wasn't really working out. And that's why I'm starting to trade with a plan, and it really shows the difference. And it's also very important to use charts. Those are probably one of the best things you can use. It really shows you what the heck is going on. So what I was talking about is trading with a plan. So a good way to do this, which is what I'm trying to do, is swing trade. The majority of this account is going to be swing trading with those backup stocks like I talked about. But when you're swing trading, the best thing to do is get in when you see one of these little buggers. So when I say this, I'm talking about a green candlestick that closes above the SMA line. And this usually is a sign that the stock is going to break out. So as you can see right here, the stock broke out. And if you had gotten down in here, you would have gone from 245 to 682, quite the gain. And same thing goes for down here. As you can see, one green candlestick closed above the SMA line at 118, and usually get out when there is one red candlestick closing under the SMA line. So either here or here, which would have been quite a nice swing trade from 121 to 229 or 226. So yeah, that's basically what I mean when trading with the plan instead of just seeing, I don't know, seeing some green right here and then buying and then just having it tank and then you're selling over here. Now, this looks pretty crazy. I don't know what happened here. But yeah, that's what I'm pretty happy with. Also, look at the RSI. This is very important. If it's overbought, it's usually going to come crashing down. But as you can see, we are in the overbought, which is why it's risky, as I said. But I'm still going to hold on to it. As you can see, we've got growing volume, so more and more people are interested in this. So I'm just going to be holding on to this, and hopefully I can get out in time, make some moolah, So moving on. So in the other types of stocks that I'm swing trading currently right now, there is also Square. Swing trading this one is because it's had amazing growth since the March crash. It's been insane. So I got in not too long ago. I think it was before last week, halfway through the week. I got in and I'm up $12, so I'm pretty happy about that. Very strong, solid stock. Now, Square is an amazing stock. It's a company that actually is sort of, I don't know how to explain it, but it's kind of sort of like PayPal, Venmo, but for credit cards. It's hard to explain, but if you've ever been somewhere and bought something and the seller had an iPad and you swiped your credit or debit card through a little square sticking out of the jack, then that's Square. That's what this company does. So looking at the charts, this, again, I was chasing the price a little, but since it had such strong, promising growth and it was a very good company, I decided to buy in. Now, looking at the volume is not too insane. We are near overbought territories, and usually when it's peaking on overbought, it has crashed, but this is mostly the March crash, which, looking back over here, as you can see, there was a crash right here. And looking down at the RSI, we were near overbought territory. So I am being careful with that, but I'm just riding the wave and hopefully can continue to make some money off it. So far, it's been good. But here's why I'm so happy with charts and why they're so important and why I emphasize it so much is because, look, if you had used the strategy that I'm talking about, you would have been up about $68 on this thing, I think. Yeah. Looking right here, one green candlestick, close above the SMA line, buy right here. Just carrying yourself up all the way, and you would cash out somewhere over here. It hasn't reached that point yet where we have a red candlestick under the SMA line, but I'm just going to hold on to this until that happens, and hopefully it keeps on going up, maybe 150, who knows. So this is why it's very important to use the charts, because you're allowed to swing trade and find these amazing opportunities like so. Here's an example. Right here, you get in right here at $64, and you would get out right here at 77. So a nice little swing trade. And you can repeat that as many times as you want. Right here, same case. Get out. Okay, well, this is kind of a bad example, but you would get out 78 and you would get in 75. So even though it did drop down over here, you'd still be making it out with some profit. And the good thing about this strategy is if there is a loss, usually the loss is very minimal, and that's why it's good. So right here, for example, you would have gone in at 75.85 and you would have gone out at 74.64. So you would have gone lost, but it would have been a very minimal loss. So that's why this strategy is so good for trading, swing trading, because the losses are minimal and the gains are quite high usually. So that's what I've been using for swing trading, and that's why I'm mainly swing trading on this account. And as I said, I've got those blue chip stocks as backup, which are also dividend stocks. And I've got two very high dividend stocks that I put in buy orders, and I'm probably going to be getting those Monday, which have upwards of, I think, one is 14% and the other one is 12% or something like that. They're very good dividends. They're monthly paying dividends stocks, so I'm quite happy about those. They aren't blue chip, but they are dividend paying stocks. So those are really good strategy of swing trading. And yeah, moving on. Something to add real quick, I'm going to be doing weekly updates of my portfolio, showing you guys what I made over the week, how I did it, and I'll be showing you all my trades. I'm not going to go over all the trades for this because there's so many trades, so many mistakes I made along the way, but I'm just glad to be where I am right now, and I'm just basically turning a new page, so I'll just be showing you guys what I'm doing from now on. So moving on, we have the blue chip and dividend stocks. I'm pairing these together because they're pretty safe and they're just going to be bringing in money. Wells Fargo and TD are both blue chip stocks, and the reason I have these also is because they're also decent dividend stocks, like O, which is a REIT, basically a real estate group that's giving you a percentage of what they're making as the dividend, and the Toronto Dominion Bank, which the reason I picked this is it's a bank. They usually don't fail. Wells Fargo, same, it's a bank. It's been around forever. O is one of the top rated dividend stocks. It's a monthly paying stock, which is amazing, and it's got really strong growth on it. So does Wells Fargo. Wells Fargo has about an 8% dividend. TD has about a 5% dividend, and O has almost a 5% dividend if I'm not mistaken. So yeah, the reason I keep these is if there is another crash, a recession, or anything like that sort of thing happens, then I do have these stocks to fall back on, which are going to be bringing in money no matter what in the form of dividends, as they are very good dividend stocks. And also, they usually have growth, good growth over time. They usually recover after nice, good recessions. And us being in a recession, I took advantage of this time and bought these at an okay price. If I was smarter, I would have bought them during March, but I did not have this count during March. So that's it for blue chip and dividend stocks. Yeah, pretty happy about those. Moving on, our gold stocks, we've got BAR, AAU, GLDM, and DRD. As I said, these are for recessions also. These are pretty good because everything is going to be losing money, and these are usually going to be bringing in money. So during the days of red days, this has helped me a lot because they help make up that loss. Even if it's 11 cents, it's still 11 cents saved. And most of these stocks, they'll have red days, but other ones will be green, so it usually evens out towards the end of the day. As you can see, Thursday was not a good day. We had 40 cents, but before that week, I think we made over $10, so I'm pretty happy with that. Overall, right now, I'm up 11.32 in stocks and 145 in ETFs and closed-end funds. So I'm pretty happy with all of that. I'm also holding $141 in cash, which can't lose money, but it also can't gain money. So that's kind of not the best investment, but we are in the midst of a very uncertain, high volatility market. Who knows what's going to happen next? We don't know what news is going to come out, so I'm being very cautious of what I'm investing in, and I'm probably going to start investing in some options now, some Tesla options or some Nikola puts, because Nikola is a trash company. It's most likely a fraud like Theranos. It's another Theranos, in my opinion, but I'm not a financial advisor, so it might just be good. Who knows? Their promises are very outlandish, and they've got nothing to back it up. But the only thing is Nikola puts are very expensive right now. But yeah, my future plans for this portfolio is to keep on swing trading, which will be the main income. Hopefully, I'm shooting for like about 1% growth a day, which is insane. It's most likely not going to happen. I would love it if I get at least a 2% growth a week. But dreaming is free, so I'm just going to keep on doing what I've been doing, which has been making me money. So I'm going to be checking in every week. I'll be doing updates on my portfolio, what moves I'm doing, and I'll let you guys know if I deposit any more money, because for some reason Charles Schwab has this thing that's broken, which kind of pisses me off because I have to keep track of everything in Google Excel or a Google Sheets document, because I do not have 360% growth. That would be amazing over 47 days of trading. Freaking, that would be amazing. But it's only counting this first $100 deposit. So yeah, I'm gonna be keeping track of everything and letting you guys know what goes down. So thanks for watching, guys. I hope you enjoyed the video. Leave a like, subscribe, and comment down below what your plans are, what you're doing, and what you would like to see next on the YouTube channel. So thanks for watching, guys. Have a great rest of your day or night.